Stocks lost their footing a bit today. The S&P 500 and the Nasdaq pulled further back from their all-time highs. A decline in oil prices weighed on the broader market, as did those comments yesterday from Federal Reserve Chair Jerome Powell, which we told you about last night. Powell referred to inflation pressures as being transitory, and the market interpreted that to mean an interest rate cut may not be on the horizon. The Dow Jones Industrial Average fell 122 points to 26,307. The Nasdaq was down 12. The S&P 500 slipped 6. So what will it take for the market to move higher? Bob Pisani takes a look.
There was a few headwinds that drove the action today. Crude oil prices plunged to suffer their worst day since going back to December. Oil went from $65 to $61 a barrel. The Trump administration has stopped issuing waivers that allow several countries to buy Iranian crude, so that's sparking uncertainty about prices. But beyond that, there are bigger issues for the stock market than just the oil market. We have moved up so much, about 50 points in the S&P, that's nearly 500 points in the Dow, just in the last 9 days or so to the new highs that we hit. The path of least resistance right now is sideways to down. The risks to the rally right now include no trade deal. Indeed, there was debate today about just how well the trade talks are going right now. And with the Federal Reserve, the market wants a rate cut, but Fed Chair Jay Powell seems unwilling to provide it. Elsewhere, we need China to keep recovering, and we need earnings to keep staying in positive territory. The biggest problem is the market is just expensive right now. Earnings are expected to be up only in the low single digits for the next few quarters. Also missing from the rally are the retail investors, and short-term traders have been bullish, but longer-term retail investors have not been big participants in the run-up so far. Small-cap stocks in emerging markets have also not been as strong as the big-cap stocks recently. Elsewhere, China stocks have been soaring this year because China's central bank has been stimulating the economy. But we need to see consistent improvement in the economic data over in China for the next few months. So here's the bottom line. With earnings season winding down, a lot has to go right for the markets now for stock to just keep going up. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.